All right, trading of foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and your risk appetite. The possibility does exist that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Again, this trading room is for educational purposes. Alan, myself, or Matt will not be giving any sort of financial advice or recommendations. Any trade that may be taken during this session is not a recommendation that you should do the same. Past performance is not indicative of future results. And we've already mentioned not trading with money you cannot afford to lose. Make sure before you're trading, always operate within a written trade plan with identifiable entries, exits, targets, and risk management. Al, are you with us this morning?
I am here. Good morning, everybody. Can everybody hear me?
Al, let me go ahead and stop sharing, let you go ahead and do your thing here.
Okay. Right now, the last alert we had was back in 5:45 this morning, East Coast time, the British USD. It's already been pretty much out of the chute, but I'll do a replay on that to show you how we would have gotten in or how this thing played out. We'll keep an eye on, see if there's any other alerts that come about. I am going to be looking at the Euro US, since it had such a strong move last week. We'll keep an eye on that one. We don't have any alerts on it yet, but it did just do a nice little breakout, and hopefully we're looking for this thing to kind of retrace a little bit. But anyway, having said that, we have the British US. I've got right now this on a replay on a 5-minute chart.
Make sure you're sharing your screen now.
Oh, thank you. Thank you.
Not a problem.
Hey, good morning, everyone.
Good morning, Matt. And here is the British USD. So basically, we had an alert to 5:45, which is right here where we have the yellow line. And I said this is on a 5-minute chart, but basically the 15-minute chart drew out the same way. Basically, I was looking at the pivot low from the Sunday's open, which is right here at the, put my A at the bottom. It was an ascending wedge, so that was at 5:10 Sunday evening. Came up to a pivot high, which is in the middle of the night, or about 11:15 last night on Sunday. And then I just looked to see where I could connect my A with a couple of hits in the middle to my C point. And then I took my D in as close as I could to where the wedge alert was, which was right here. And I drew my line above for my breakout above. I was looking at my RSI particularly, and it was showing that there was both the indicators and the RSI are above the 60-40 zone, moving to the upside. So I'm looking for a possibility of a breakout on this. So let me go to see if I can put this on a 1-minute chart for the breakouts, and looking for where that may be breaking out. All my moving averages on my 5-minute are in the right direction. My moving averages right now are back in the middle. But then this is on a 1-minute chart. On a 5-minute chart, they were probably still breaking out a little bit, but we're just going to play this piece by piece, candle by candle. You see where it's starting to get a little bit weaker. So this is a pullback, but we're still inside the wedge. So we still do nothing until we get the breakout above the wedge. You can anytime, and it's always possible to try and take early entries in one direction or another, but you're still kind of rolling the dice a little bit unless you have some other indicators to help back you up to maybe get that earlier entry. And so we're going to keep on playing this thing candle by candle. Again, this zone up here is our two pip zone that we're looking at. Let me put my entry level in here, entry to buy, which is right in here. We see right now this candle is coming right up, and we're looking for a close inside this zone with a small pullback to continue the move. There's the close inside the zone. I'm looking for my red candle to pull back. Right now I'm looking to possibly enter this thing long somewhere inside the zone. You could take it long right here, but you don't know if this zone's going to hold. Again, I like to see at least a 1-minute candle, at least the 1-minute candle at least turn red, retest the wedge, and then give us an entry. If it just comes back, retest the wedge and comes back blue, then I'd be okay being in. Right now, this is a potential entry zone. There was a nice, the candle closed, it ended up wicking up above our entry zone, couldn't close above it, and now we have a red candle. So right now I have to be looking at this thing where I don't want to be entering. If it breaks through on the upside with the close, then I'll be able to come in. We'll see what this candle does at this point. Comes down, is back into the wedge. So right now we're still looking at possibly with a buy stop. If it comes up to the upside, comes into the zone and then goes to the upside, that would be a possibility. But right now it's back into the wedge, and there's still no trade. Although the moving averages are correct, my RSI is still pointing down inside my 60-40 zone. I'm waiting for a hook and for this to come back out of the 60-40 zone. There's a hook, there it's out. Here's a close right at the wedge. Still no confirmation. Still no confirmation. Still no confirmation. There's a nice strong pullback. Aren't we glad we didn't get in just yet? And now it's pulling back. And I'm looking at this area down here to hold before it comes back to maybe retest or to break to even a lower. So this would be a potential stop zone down here at the bottom of this candle, which is right below our 1 minute 62. I'll be putting this as a potential stop zone. We'll see where this thing goes. Right now, we're still theoretically we're not in the trade. There's our close in the zone in the wedge. There's a close right out. Now we would be in the trade. We had the nice little pullback. I'm going to move my stop area right up into this area. Still respecting this low and then this low. This is a higher. We have a higher high to this one. We have a higher low to this one. And now we're getting a break. Once this thing breaks, then this thing would be validated as a higher low. And our target would be 7 pips above, which would be for a long position. We would say we entered here. If we entered on this candle, we probably got filled probably 2 pips above or 1 pip above if you're lucky. If you have a good broker, there's our 7 pips. Here's our target up at the top. Here's your first 7 pip target. And we'll see what happens. Continue on. Comes back. Right now it's still basing inside this zone, but now we would be in the trade. There's our first big push. That was a good, nice little push there. We got just right up to our target zone. That would be your cue to either get out or wait to see if you can get filled. You probably did not get filled with 7 pips because of the spread. It has to come through that at least. Right now the spread's 1.8. It would have to pass this red line by 1.8 before you would be filled at the 7 pip area. And there you probably would have been filled. You would have been in. You just made your 7 pips profit. Now it's coming back to retrace. And it's still going strong to the upside. And looking down here at where's our RCS tool here? It still is showing that the British pound is strong. The RSIs are saying that it's strong. It's coming up to our 89%. Once it gets to 89% and starts to hook, you may be thinking about taking profits if you're not already out of the trade by this point. There's our hook. Didn't hold. There's our hook that held. Now you'd be looking maybe get out of the trade and using this as or you could, now this is basically right where this thing started giving up. You have a little bit of a lower low right in here. Again, this is all on a 1 minute chart, which means you're going to have a lot of volatility and a lot of possible whipsawing at that point. Now, if you didn't get into that trade, the only thing you could do now is wait till it comes back into the zone to see if you could possibly make a second entry on this, if all the indicators held. And that's bringing us up to just we're almost to our current time here. Still fairly going strong. You see that the RSIs are still hanging in above the 60%. And there's a pullback. And let's play this out to where we are, and that's where we are today, right now. Any questions about the entry or the exits of that? Let's see, and we have someone that said they lost 7 pips on the first entry. Second entry yielded about 10 pips, so it's still profitable. Okay, yeah. And that's, I mean, and thing is, you don't know. I mean, it's always, you don't know for sure whether it's going to come up here and keep on going or if it's going to retrace back. You just don't know. All you can do is take a shot at it if you feel good about it, or you just wait for maybe just have to wait. You just, again, it's a judgment call whether or not you take this first one over here or if wait. One thing I do like to see is I like to see a little bit of a basing. And that means that when it gets inside, either just below the wedge or inside the zone, have a strong candle with a red candle. That's why I like seeing that red candle first before when it gets into that area, because most of the time, if it's a strong move up, it'll give you that one candle, that one red candle before it takes off again. And if you get this 3-candle move like this, we have a nice blue candle, one red candle in between, and then a strong move, then you're pretty good to get in. Or if it happens right down below, even like right here, it was a red candle, blue candle, red candle, blue candle. And but then it came right back up and retested the area again. That was the retest. But a lot of times I like to see this 3-candle formation of a blue, red, and then break the top of this first blue candle, and then you're going up. Or on the downside, having the red candle, the blue candle, followed by another red candle, then you'd be okay. This one was starting to base a little bit.
Hey Brian, Al, sorry. I like what you did here, especially with if you go back to where your potential first entry was. I wouldn't have taken that because there was no engulfing candle, or there wasn't enough to say that it was going to keep on going. You know what I mean?
Yeah. And you didn't have that. Again, you like to see that one strong move into the zone. And
a lot of times there was no major pullback.
Right. And the thing is, if you get these strong moves into a zone, a lot of times that's just the big move that's going to come just before it turns around. Or the other side of the coin is it's that big move that happens before it continues on. So, but usually whatever you want to be doing, a lot of times it'll be followed by a strong big candle. And the Euro US is still climbing on the way.
Yeah, I'm not happy about that.
Your question, Gabrielle asked, would you say this is still a valid trade to possibly get into? I got in at the last pivot low. So I don't know if that's where I got in. I was late to the game, but it still fit. I had a flat top, so it came right to the edge of my wedge. And so I don't know if I'd do it again just because of the time.
Yeah, the only way I would say that would have been, even that would be, you have a nice strong move down. The biggest question is if you had some other indications that gave you support that saying this thing was going to keep on going.
At the time of entry, the pound was 7 and the US was 1 on the 15 and the 5.
Okay, that was a good sign. But I
then
wouldn't
it quickly flipped, but I had to bear some pain. But
yeah, that's still nothing that I would take personally. I don't know. I want the break. If I don't get the break, then maybe when it comes back down and tries to retest the line, maybe I'll get in there. But I'm not going to take it this late after the game. Well, I'll wait for the better setup, because you want your entry as tight as possible. The sloppier your entry, the sloppier your trade management's going to be down the road, and you're going to potentially pay for that. because you're going to have to work that much harder to get your 7 pips.
I know Gabrielle knows that what's going to end up normally happening when you go this far past a wedge alert that Iris does, you'll usually get another one on the same pair. So just wait for the new one.
Yeah. There was a strong pullback, and you can see that once it broke the wedge, you can see we're starting to follow a trend line from where the wedge alert was. There was here's a low, here was an anchor, here was a hit. This pullback, but again, at this point in time, you don't know that the pullback was confirmed. You didn't really see it being confirmed until either the moving averages were back out, and then you still don't know how much higher it's going to go. Now this pullback, you can measure this from this point down to this point and see how many pips you had, because this would be where your target would have been. This has been your target potential. I mean, that's still 22 pips, which on a 1 minute chart in this time frame, that's still a nice target area for the retrace. I would not try to take it in now, other than the one nice thing. The thing I saw is here's like a little flag pattern here. You have a nice little, what they call this to be the flagpole, and then here's the flag. Where you can see we have like a little channel that's coming down, and then it broke the top of this area. And but that's getting into a little bit different type of scenario. You're better off, especially until you get the experience and can see some of these other patterns, to just stick with the wedge alerts, wait for the breakout, try and get in, try and get your 7 pips and be done.
I see another flat top ascending wedge right where you're at.
Right up in here.
On the 1 minute, yeah. But I mean, that's not an AIRIS alert, so I'm not putting a lot of weight into it.
Let me take this speed off, and let's see what we had. Anything else to come about? Nothing yet. So let's take a look at this Euro US while we're sitting here, since we do have some. One thing I was looking at with this is not an alert, but this is more of a technical analysis type of thing, where we had early this morning, well, this was starting at 5 o'clock this morning, we had a nice big move up. It pulled back. I remember we saw them say that if it pulls back to less than 38% or around the 40% area, it'll oftentimes go up to the next level. Well, you can see where it started right here was the big move up. It retraced about 38%. And then the next target was usually, I usually say the next target is usually going to be up in the 1 to 78, and I usually try to split that, and that's exactly where this thing went. But these big red lines here are this zone right here, where these orange or reddish orange lines are, they date all the way back to November of 2018. We're looking at almost 3 years ago, about 2 years ago, at the high 2 years ago. So this thing is making this really strong move, and it's hard to say where it's going to stop. But right now, this was a zone I'd be seeing where it's going to be having to respect. We did get a close above here. We are getting a little bit of a basing on this one. This thing still has potential going up even higher still. This is the next area of interest up here, is up the 1850 area. And it could and there's not a whole lot stopping it in between here on it from a day. These are from reference to a daily candle. So this thing could keep on going for quite a while. But that's we're still waiting on some alerts for that. We don't have any alerts from a Euro US standpoint. We're looking at the Euro is still strong. This is basically right now, it's the strongest currency of the pair. So right now you don't want to be short and going against the Euro, whatever pair may happen to come up. Most of these alerts all come up with a US based pair. So you probably wouldn't get a Euro and a Yen pair off of the alerts, at least not yet. So going to the next possibility of looking at 5 o'clock, we had a New Zealand US alert. So let me go and put that on. We did the British. Actually, we could maybe take a look at this thing coming back down again. Let me see if we can take this all off and see if we have anything coming up with this. This does look like it did make a nice little high. And it's coming down to, let me redraw this wedge again since I took it off and show you how we drew it. It was at 545 ascending. I'll draw this again. 545. So right there was where it was an ascending wedge. Again, I like to start looking at where the previous pivot high and pivot low is for the day, and this was where the daybreak was for Sunday, where it opened up on Sunday. And so I started here with the low just after the daybreak. It had opened up, went up to a high, came back, retraced, and then we had the alert right in here. This is where the alert was. So right now it's coming back to retest the wedge. And we look at the move from here to where the high was. That was a 25 pip move, which is a significant move for a Monday morning at early pre-market.
Be interesting if it comes back and retests that wedge, eh?
Yeah, it'll be interesting. Yeah, we'll see if it gives us any reason to maybe re-enter it for a second move.
That would be potentially a very valid move, very valid entry.
And we have our 15-minute chart. We have our RSIs, the three period RSIs breaking now at the bottom of the 60-40 zone. The 8 period is still inside the zone, so this is just a pullback in my mind. And we'll see if it gives us anything.
Did you answer Alan's question about the missing the entry zone?
I said miss the entry zone. Do you draw the 2 pips as a rule after drawing the wedge? Yes, as a rule I do. As a rule, we give ourselves that 2 pip zone breaking the wedge, because generally that's to help cover the spread a little bit for the buyers and sellers having a little battle right where it breaks up. First and foremost, I want to see a close above the wedge, and then we start looking to see if we can get within a 2 pip entry of that. So yes, once I draw the wedge, I fine tune it on the 1 minute chart. I draw it on the 15, but then I come over here to you can start with the 5 minute chart, and you can just tuck these prices in just a little bit tighter. Because that's just showing the exact point where the 15-minute candle was. And I can go to my 1 minute chart and do the same thing. A lot of times I just do it to the 5 first, just because it gets so spread out sometimes that it's hard to find it. That looks good there. That looks good. And I check my A, move my A over just a little bit. This is at the very bottom. And you see that here's the anchor. Here's a near hit right here. These are all within a pip of each other. If it's within a pip or 2 pips, that's close enough for me to respect that. And right now we're coming in. It's coming in. This is where this is where it broke out first. But you see the wedge itself is that this part of the wedge is actually descending a little bit. So it's going to have to go a little bit further to get to the wedge. But this point right here on the D, I'm looking at the highest point right at the peak of where the D was. I'll put a little line right there. And that's pretty much where your new zone is. It broke it. And so now it's coming back. If it's going to come back, it's going to be respecting this area. It probably retest this high level here.
Hey, Gabrielle. So it looks on Forex Factory, it looks like it's just an orange folder news. So it has a little bit of impact, but nothing that I would stop trading for, or nothing that I would put too much weight into. You might get a little impulsive move of 10, 15 pips in one direction or something, but not overly crazy.
And right here is our 2 pip area from the wedge. This is the 2 pip zone. I'm just going to mark that as my entry to buy. I'll lock that so we don't move it. And right now, if this price can come down anywhere in between this red line, which is where the top of this D was, this is the one that got broken the first time. And then we say that what was once resistance is now support. And so this zone here right now is getting into that area. but it has some weakness. I would still like to see this on the 1 minute chart. I'd still like to see these moving averages, or these, excuse me, these RSI indicators get above the 60. Right now, this is a pullback. It's a fairly strong pullback, but I want to see these things get out with some strength on the other two time frames to be. Right now, it's still. I consider this to be a pullback, not a reversal. So just pull back into retest the zone, see if they left any other orders behind that wants to go and take. If we can get into this zone and we see where the RSIs are coming out to the upside, and if we can see where we get a little basing in between, like this is a nice strong move down. You can see where, as I was talking about, this drop. Here's the base. We have all these red candles, one single blue candle in the middle, and then it's going to drop. My suspicion is this thing is going to go even lower still. It may come back into the zone. It's got a lot. It's a fairly strong move. This is good. Put this back on a 5 minute. So we have a 15, a 5, and a 1. Right now, it's bouncing right off of the 5 minute 62 moving average, which is a significant pivot point. It's coming back into the wedge, which is right where this is, and but it still has a little bit of upward pressure based on the. But now if you look at the British U.S., the British is the first currency of the pair. The U.S. is the second currency. The U.S. right now on all 3 time frames is showing the strength. I would not take this thing long with this bounce unless we get a real strong flip. But right now, this is showing that the dollar is now becoming stronger to the British pound. The British pound is the weakest. So we're looking at this as being more of I could almost consider this was almost like a really strong head fake. It got us in, got some good profits, but I'm looking at this thing to come and break to the downside right now. And with this nice base drop, this could give us the same type of scenario that we had with the US dollar, only against the British pound, where we have a high. This was a low, this little basing right here, and then comes down and retests this area right in here. Which is right about where it bounced the last time, which is right at the 62 on the 15 minute 62. But right now, there's no real place to get into this trade right now. But this would be an area of interest right there where that box is. And if you look at the US dollar, you can see where the dollar made a nice strong move right up into that area that I drew out. And now it's coming back to retest. It came right up into the zone, took out this level right here, went up, wicked up, couldn't quite. It did break on the 15 minute, but if you look at a higher time frame, you'll find out that it didn't break. Probably didn't close. This was at 8 o'clock. It's an hour candle. Yeah, maybe it did. But this zone is still holding somewhat. So right now the dollar is finally starting to regain some of its strength back again. So we'll keep an eye on that. Wish we could hopefully get some alerts here before the day is done. Let's take a look at the New Zealand USD. So we'll go to let me just double click on this, duplicate this. And we'll make this one a New Zealand USD chart. Oops. And we'll put this on a full screen.
You have a new IRIS alert.
Oh, hey, good. That's wonderful. We finally got one. US yen, 830. Here we go. US yen, 830. Make this full screen. Take off all the tools we have here. Take this one off right now. Right now it's showing that it's consolidating a little bit, so we'll keep that in mind on the 15-minute chart. And here's our alert at 8:30. And it was a descending wedge. Slide this over here. Descending, so we're looking for starting the A, keeping it on our triangle tool. Starting up here, I'm looking to see where I can find 3 possible points of a trend line. And I'm going to start with, I kind of like this one right here, because I can, if I put it, I have this little hit right here, so I'm going to be using that as my reference. I'll tuck it down here to the low, move this up to the C right just before the alert, and I'm going to flatten this one out at the bottom. That's my 15-minute, that's my chart on the 15-minute wedge. I'm going to be looking for some potential target areas. So I'm going to take the next high that has a clean wick of this. This is going to be a potential target, and we'll see if this is going to be enough to even make it worthwhile to take it on the upside. If it breaks the C, and do we have enough room to this point up here? I'm going to be measuring that, and there's 22 pips. That's plenty of room for a target. And to the downside, we have nothing over here at all. So if it breaks to the downside, it looks like we're going to have lots of room there. Go to tweak my chart. I'm also going to look and see where my strength is. Right now, my strength is about even with the US yen on pretty much all 3 time frames. So we have a little bit of time to wait before we need to do something. Let's keep on drawing. So, okay, I'm going to tuck my C in next to my alert. I took my B in as close as I can. That's going to be right over around this area. You can see I have a hit here, I have a hit here, and then here's the wedge. I can probably see if I can probably move my B a little bit closer, but I'm going to keep that because if this thing comes back down, I want to see it because this will be the 3rd hit. If it comes back here, it'll be the 3rd hit on this line. Right now, it looks like it has room to the upside. It's favoring the upside a little bit just by the RSI. So we're going to be prepared to take this thing along. We have lots of room to the upside. Draw my wedge, and I'm going to measure this from the alert. It's at 105.408. I'm going to look for 428. Move this up 2 pips. I'm going to lock it. I'm going to label it. It's my entry to buy. So right now we're looking for the candle to come up, close inside, and then give us an entry. Wait for it to break the wedge. And then we wait. Do we have any questions so far while we're waiting for this thing to do something? So one thing right now I'm looking at, on the 1 minute chart, we have a little basing right in here. So I'm going to pay attention to that. Again, on the 1 minute chart, you can't put a lot of weight onto it, but it's something to be, at least to recognize the price action.
Al, what's your 15 RCS?
15-minute RCS is, we have a 6 and a 5, favoring the US to the upside.
Okay, thanks.
So there was a little zone. You can't even see that. This zone, you can't even see it on the 5-minute or the 15-minute, but it's there. So if I do get the break on the upside, I'm going to be looking to see how much room I have to the bottom of this this zone right here. So if it does break, we still have it would still be our 7 pips. We roughly have our 7 pips to the bottom of this.
And Al, if you could blow up your 1 minute chart to show where your A point is.
Oh, the 1 minute. Okay. So over here at it's at the July 27th at 3:49 in this morning, East Coast. So right now I want to see this thing break. The C is going to be the reference. I want to see a close above the highest close where the C is. Actually, I can take this over here. That's where the highest close was. We'll take it right from this point. So I'm going to be looking at this high right here as being a significant point to be dealing with.
If you take an entry in that zone, where do you expect to see resistance? Right there at the 105.46 area?
105.40, 105.46 would be.
If you get into this trade.
If I get in the trade,
Where's
actually,
place?
where was that? My A, where's my A mark? Should be, actually, here's the top of my A. So I'll be looking at, this would be the target zone. So I'm going, this was the zone above where the A was. There you go. So I'm going to move this down to right in this area, right in here. That would be this would be the first target zone.
Pips.
Say that again, Brian?
You would be expecting to go further than 7 pips?
I would think it could, yeah, this thing could go, here was actually, if you look over to the left here, there was like a drop here as a basing. Right now, it's basically testing this little area right in here, right where the C came in. So once it breaks, what I like to do is I like to look and see where the wicks are. And once I see a wick, I have to go up until I have a wall. Basically where behind the wicks are a wall. And as long as you can keep on hitting wicks on each candle, the wall's not there. Now here's where the top wick is. So this would be an area right here. This would be an area right here. But if you look at, if it breaks, let me see if I can do this here. This is the highest wick right here, right there. And if you see that once it breaks the top of this wick, there's nothing really stopping it until it gets all the way up to here.
Right.
So that would really be the first target, which is at 45, which is a key number to keep in mind. We're coming into the zone. It's breaking. This is the U.S. yen. Let me get some of my charts set up here for this, just in case I would decide I want to take it.
You got your 3 hull moving averages in the right direction as well.
Yep, and we're getting the break here. We don't have the close yet. Let me see if I can get this thing set up.
No, I wouldn't take it unless I had a nice clean close, right?
Need to have a close into that, above that wick, so that it closed right at the wick. That's not good enough for me, especially with a little bit of this. Not saying it's not going to work, but I would be a little bit patient with it.
If you guys can put all of your questions and stuff not in the chat panel, but in the Q&A panel, that way we won't lose them, and then we can address them because it shows up a little bit differently. If you write it all in the chat panel, sometimes your questions may not get answered.
You can see, like right now,
want to, but
we're going to see what this candle close is going to be a significant candle. It came up. Right now we're waiting for a close above this yellow dotted line. We still have another 1 second. There's our red candle. back into the zone. I not only want to see it close into the wick, I also want to see it close above this sea level. That
That's
means
a pretty tight zone.
It
That's
is
a pretty tight zone.
Yeah, I mean it's only 2 pips, so I mean you're not looking at a lot, but
No.
it is significant that we get a close above a higher close. I mean this is just a wick to draw people in, but now this thing turns blue, I can take the trade. So another 7 seconds, red candle still.
Looks like a pretty big rejection. We'll see what happens.
Well, it seems like basically right now that's a neutral. I consider that a neutral candle.
Oh.
I'm in. This was a neutral candle. Basically, it was the close was right near the high of the previous candle with a nice big wick. I'll take a shot at this one.
Yeah, I don't know too much about those the candle activity so much, but I'm learning.
We'll see. Yeah, I got my stop and my target in. And we'll set up here's our stop. Here's should be 7 pips. Make a 7 pip stop, 7 pip target.
So Ruben's asking why you said 0.45 is a key number and not 00, 0.25, 575. So quarter theory.
Yeah, it's a quarters theory. If you look at the quarters being like 0 to 100, 50 is the mid range. 45 and 55 are 5 pips on either side of that mid range. Oftentimes, if you see a downward move and you see the break of the 45, it will usually go lower, and when it comes back to retest that 45. If it can't close above the 45, it's a good chance it's going to continue on to the downside. If it breaks the 45 to the upside and breaks the 55, it breaks that 45-55 range, which is that 10 pips on either side of the 50, 5 on one side, 5 on the other side. And then if it breaks the 55, then it looks like it's more likely to be going up to the next 75 mark, which is the next quarter.
I like that answer. That's good. So Alan, you had a question about the indicators that you're seeing on your screen, if they're part of the Hawkeye method for AIRIS or if they're a premium package on TradingView. So things are in the works. We're talking with corporate about finding a way to get these indicators all in-house so that it can, so everyone can benefit from them. We're talking with the developers and whatnot just to finalize some details, cross your T's, dot your I's, make everything compliant and whatnot. So more to come very, very soon. That's pretty much all I can say.
Hopefully we'll have some answers this week. They had the leadership had a meeting this week, and I'm sure that some of that stuff was discussed, and hopefully we'll have some answers this week to be able to share with you guys.
Yeah, so MRSI, it's basically, MRSI is just two RSIs that are overlapped on top of each other. There's the fast one that's 3 and the slow one that's 8. And then we have 2 bands put in there for 40 and 60 so that we can track when it goes into that zone. As you can tell, when it goes into the zone, it has a pretty, it respects it pretty nicely. Look at that.
Not that you want to know, but you do have another AIRIS alert that just came out.
Okay.
Watch it be Euro USD because I'm watching that and I see wedges everywhere.
It's the New Zealand USD. I think we'll just hold off on that one for right now while we're watching this one, since we're already in this one. If you want to take a look at that, Brian, if you have time, let me know what you see, if it needs to change courses here.
Will do. I'll do it now.
So we had this the 8 came right up to the 89. It's got a little bit of a hook, so it's got a little bit of a pullback to retest this wedge. And if we look at all of our time frames, right now the dollar is still strong. I'd still like to see a 3-point spread on the US yen on all 3 time frames. Right now I'm only getting a 1-point spread on the 15-minute. We're basically right back into, even though that looked like a big move, it was really only like about 2 pips. I barely got my spread out of that to be profitable.
The whole moving average is still in your favor on all 3 time frames, so it's, we'll see what happens with that.
Let me see where my moving averages are here. Still above the 62 on the 1 minute. What's going to be important is that we don't have the full spread on the 5-minute chart. There's still a little bit out of position. I like to see the green above the yellow above the purple, and right now that the purple is above both of them. So that's a little bit out of my favor as far as. And the other thing is that on the, I would not expect this thing to go up real high, or if it does go up, it's going to bounce off of this orange one. As I look at the dollar in general, the dollar seems to be getting more strength, which is still in favor of the yen here, in favor of this thing to still go to the upside. And the dollar is still stronger. The dollar is the first currency of the pair, so therefore we're looking at this thing to go along with dollar strength.
Kiwi's just now breaking the bottom of it. It's kind of doing the opposite of what you're doing.
Kiwi US, so that's again to the dollar strength. So let's take a look at that one while we can. And so it was, the alert was at, let's see, it was a.
You want to see my screen?
Sure. Yeah, I'll go ahead and stop since you already have yours drawn out, and I'll stop sharing.
Excuse me. All right. I'll just make this real quick since you guys are.
And I'll keep an eye on this Euro US. Or the
So
US
here's the ascending wedge. Pretty much a flat top, not exactly, but it's pretty close. 2-pip difference here. We're coming in. There's our alert. Drop down to the 1, and I'll blow this up for you guys since we're going to monitor this thing. And it's just the same rules that Al has. It came into the zone. It's been rejected. Now we're gonna wait until it gets in here and has a nice close before we ever think about taking it. And so just so you guys can see if you're drawing it out with me, there's your points. I backed this up to be behind because it was actually sitting right here, but I wanted to have 1, 2, 3 across the top. The A and C are in line with the trend, and if you go back further, it's going to be down here at this pivot. This is where the trend continues again. So there's still 3. I just shortened it up a little bit. And then again, we're waiting.
That's 2 really strong trend lines. You know, when you get 3 hits on a trend line that are that spaced out, it's pretty significant.
And then we're back in the waiting mode.
And we're getting a little bit of a bounce off. Yeah, about pretty much the same picture.
It's just
We're
the only
getting,
again, you're
yeah,
talking U.S. dollar.
yeah. Basically, we're just talking about what's happening with the dollar, and right now the dollar is it's recovering some of its weakness. We're getting well. It's getting
Oh,
to
now we're
it's
going. I need a little bit further into that. It needs to really come below that C as he mentioned earlier on his. I would love to see it close right here, and then I'd consider getting in.
Yeah, I would look for it to close and then come back and retest that zone somewhere before entering that position. Because even if you have the 3 hull moving averages all in your direction, you want a lot of confirmations. I do like that the 62, 513, 62 are spreading out like that. So that's a good sign as well. There's a lot of good things in that one. We'll see what happens.
So like I said, we're basically we're looking at a little bit of dollar strength. The dollar took such a hit last week with the quantitative easing announcement that it's starting to recover some of its strength again.
I hope so. I've got some positions that are in some significant drawdown right now.
And right now it's showing that with the New Zealand is showing dollar strength. The yen is showing dollar strength. On the Euro US is starting to show some dollar strength. So everything's in line. And if you pretty much trade with the direction of a stronger weak dollar, you're in pretty good shape as far as getting being in the right direction of your trade.
Hey, Brian, was that your entry or what?
That was my entry. I don't like the spread. I mean, because I got in when it was breaking here, but the spread took me to the edge, but it's all right. Notice the spread on this particular one's a Wanda. It's 2. I'm not a big fan. This is my demo account. I'm not a big fan of that one.
No, you don't want to play with a 2-pip spread on a major. That's not acceptable.
Because what it means, I need to go a little higher with my stop just to keep from being tapped out too early.
Right now on the U.S. yen is coming back up to, it just broke the previous high that it had for our trade. And now it's only about 2 pips away from our 7-pip target.
I made my 2% for the day, so I'm done.
I don't know. So, Alan, great question. I don't know what she's teaching specifically. This does look a lot more complicated. It's really not once you get to it. Just being honest, all we're doing is we're drawing the wedges. You could actually do this without any fancy indicators. All you're doing is 2 trend lines, and then you're adjusting it on the 1-minute chart to get as accurate as you can for your touches. And then you're taking the trade on the break of the wedge, either at the 1 minute when it passes and checks, or either on the 5-minute. Or if you're brand new and you want high probability trades, you don't take it until the 5-minute candle closes against the wedge, then you can take it. That's pretty much everything in a nutshell, with the exception of adding the indicators. If you want to add the indicators, then you're adding another level of accuracy, where you have the hull moving averages, you have the RSIs in the specific location, you've got the exponential moving averages. So you can take this from super beginner and fine tune it on the lower time frames and add some indicators, but you don't need all the indicators to trade the way that we do.
This is what I was looking at. I mean, really, I just had those on. I pay attention to this, and the rest of it's just there. There's not a whole lot to it.
So don't overcomplicate it, please. Don't try to make it something that it's not. We've basically taken probably 45 or 50 years worth of trading experience and compressed it into some, like, fine-tuned everything for someone to be able to take it in a couple weeks.
Yeah, it's not, Alan, it's not near as complex as what the picture may look complex, but the strategy is really not.
You can make this a whole heck of a lot more complicated.
Yeah, make sure you're on the Hawkeye Telegram too. I posted the trade plan, and you will see once you read it that it's really not that extensive as far as a trade plan. It's very, very simplistic. But we've added a lot of these extra little things for confirmation purposes more than anything else. You don't need them. I mean, they're great to have because they do give you the confidence to take the trade, and they do give you a picture once you understand it. But to me, I want to know what this is, because this is not any sort of lagging indicator. That's current strength of a currency.
So even Ruben said he made 200 pips this morning. You know what he did? He put a pitchfork on the swing and took the other wedge. So, and I showed pitchforks really briefly on Friday, but if you want to take things to another level, you can start putting pitchforks on the major swings on the 30-minute, and you could potentially get some very, very nice bounces. Now, understand Ruben is not a brand new trader, but when he sent me that message, he's like, "Hey, Matt, remember that pitchfork you showed me how to draw? I just made 200 pips off of that." So it can get complex if you want it.
Yeah, and the thing is, what we're trying to do in this room is trying to keep it very simple for the beginners. But as you're in this room and as you start understanding the language, as your mind starts seeing the pictures and starts seeing the price actions that, as we try to explain it to you, it takes a little while for your eyes to see it. But once you start seeing it, then we're going to be adding a few more things for looking primarily at target areas and entry areas. The wedges are the basis. They're the foundation of what we're doing. But once the wedge alert happens, it's up to us to learn how to trade that wedge. And you can trade it for just 7 pips, 5 pips, or you can trade it go for that 20, 40, 100 pip moves. And what we're going to eventually do as time allows in this room is to be able to teach you how to recognize those other areas of interest to where you can maybe perhaps get more than just those 7 pips. But that's a whole nother study. We're going to be diving into that a little bit at a time, just for the benefit of the people that have been with us for a while. And the main part of what we did, how we entered the trade, that's about as routine and about simple as it ever gets. The question is, how much more do you want to try to make the trade pay off for you? And that's where that's a whole nother level of study. We'll try and dive into that a little bit as time goes on. But for right now, the main focus, especially in these early morning sessions, is how do you get into the trade? Where do you put your stop? Where do you put your target? What's the trade expectation?
That's really good. That's really good, Al. That's super.
Spread guy.
Ruben, I'll send you a message about your pitchfork. It's kind of pointing in the wrong direction, but I'll show you where you could put it to make it point in the right direction. Even though it worked, it's not officially a pitchfork. It's kind of just trend lines and whatnot. So we'll make that happen for you.
Just so you guys know too, Al would not have taken this trade, in my opinion. He would have waited for another red candle. Here's your red candle, blue. He would have waited for this to turn red, then he would have got in. Whereas I went right off of the red because we had this here and it broke below. I got in. I'm a little bit more aggressive than Al is, but I got caught because of spread. I still think this is going down. It's just
you got pulled back a little bit more.
I'm not a big fan of the two pip spread.
No, not when you're dealing with precision, right? When you're dealing with precision, you can't afford to pay what? Is it like 20% of your profit is going into spread? That's unacceptable.
Spread and commission.
Right. You can't play this game with that.
And keep in mind, the reason why we're saying 7 pip target is because of the spreads and because of the commissions. So if you, that's why I often say anything over 5 pips. If you start seeing bounces and stalling at a certain level, and you're in 5 pip profit, take your 5 pips, because that's really what you need to be able to one, keep your track record up, as your win-loss ratio up, but also that extra, it's not worth giving up 5 pips for an extra half a pip, or trying to get that that extra push to get your fill. Just accept the fact that sometimes you just take 5 pips. 5 pips is still 5 pips. That's still 2/3 of your trade.
Question is, Al, are you still in the US yen trade? I took out. I got my profit and got out of there.
I am out of my US yen trade, and I'm waiting now to see if I want to re-enter. Again, we're still looking for US strength, and right now, in order for the US to be strong, this will be another bounce. But I'm also looking at the Euro US to see how it's doing, and right now it's kind of in limbo right now. So we see nice little pullbacks on this. It came right back into the zone. Let's just check our.
You want to share your screen?
Meters. Yeah, I can do that.
Yeah, that way they can see what you're seeing.
These take over here. Share. There we go. And boom.
Yep.
Right now it's right back into our zone. But you also see where this top wedge line is descending, and so each time it pulls back, it's pulling back a little bit deeper to catch the wedge. And it's also coming back a little bit deeper below where this sea level was. This is still valid. This is still, but you can see, like right now, if you look at if you're looking at the price action analysis on your 1 minute chart, I like looking at I don't like just looking at single candles on the 1 minute, because they are only 1 minute apart. And you can see that most of these moves are within a little bit over 5 to 7 minutes move. This part right here is hang on just a second. One moment, please. I'm going to watch something here for my. There we go. Right now we're looking at this dollar. The Japanese yen is getting stronger. Now it broke. Now it's right back into the wedge. See this trend line right here where it had trend line, had a hit, you had a hit, you had a hit, and it made a new high. Now this was broken. It came back in. It based. Remember I talked about the red candle, the blue candle, the red candle. Right now it's basing, and it's coming to retest this zone right here. Now the question is, where is it going to go? Here was a pivot low, which is pretty much right at this point. Let's move this down to here. It's still, but you can see it from as it was going, as we were getting our trade was going in our favor. The wedge is actually, we still have the bottom of the wedge is way down here at the bottom. And if we're looking to see where our strength meters are telling us, the Japanese yen is now stronger on both sides. So the yen is the second currency of the pair. It's showing stronger. So we're looking to being to the downside. It's stronger on all three. Now it's not strong by a lot. This could still be a pullback. And as Matt said, we have 2 of our 3 whole moving averages are still showing green. So again, this is still a pullback. It's still at the top of the wedge. It's still retesting this whole area up here. If you look at the 5 minute chart, let me get this one up here. And we're looking at if you're looking at the price action, you have where here was a high, here was a higher high. Now it's breaking, it's testing this region right in this area right here is where it's testing. And if I look at my fib lines, which is going to be a whole nother issue that we're talking about, but here's where our fib lines are, right in here. Here's the blue line. That's a significant level on a 5 minute chart. And if it can, my guess is it's probably, at the way I'm looking at this thing right now, it's probably just going to bounce off of that line and maybe give us another retest. I would still not take this thing short until it broke out the bottom of the wedge. Yeah, look at my
You don't want to
Euro US.
really be trading inside the wedge. You're looking to get your head taken off.
And the dollar is showing some weakness against the euro. The euro is still probably the strongest currency of the bunch today.
Before the end of the session, maybe we could do a special thing, Brian. I know you're amazing at your long-term swing trading. Maybe you can give us an idea of where Euro USD potentially could go or what's going to happen, because it's been on a rampage. Let's put it that way.
Yeah, I noticed that when I've been gone for a week, and when I got back, I went, "What in the heck?"
It's up 200 pips in about 3 days.
Yeah, I'll bring up my charts here in a second and draw that out.
Yeah, I'm very comfortable at the lower time frames, but once you get past 4 hour and past 30 minutes, I'm like, all right, I don't know.
But right now, I'm not in any. The only trade I'm in right now is the Euro US, and that's because I held that over the weekend from last week. So just working my way out of that one. I had a platform. Here's something that happened to me last week with the Euro US. Is I got into a short position, and my platform, the server with the broker that I was using, it just froze. It froze on all computers, all platforms, and even on my phone, and I couldn't do anything until it was about 20 pips against me. So I took a hedge position. So I've just been basically playing the hedge position on that ever since. I mean, I've been taking small profits along the way as it's been going against me, and I'm waiting for the pivot high and it's pretty much right in that area that we're looking at. This area right in here, where these two orange lines are, those are basically based on a daily chart. And you can see that it came right up in there. It couldn't quite, it broke up, it gave a little head fake up on this one, but right now it's starting to come out of the bottom. And that's significant that good chance this thing's going to go lower.
Yeah, see, it's not coming back up into that zone right now as we speak. So
It had another little, and actually it's kind of drawing a bit of a wedge out of its own right now.
It is. It's I've seen a couple wedges on there.
We don't have an alert, but like here is like a nice pull up. Here's a flag, came up, hit this level right here. Now it's coming back to retest where these dotted lines are.
Yeah,
so if anybody this happened to be in that, this is something to be looking at.
Yeah, I've been playing that hedge game as well, so yeah,
it is starting to show some strength after such a. I mean, any currency that loses 200 pips in a couple of days, it's going to try and regain some of that after. People are going to be taking profits and taking opposite positions to help drive that down.
Eventually. It's just that there's those significant levels right where it was, so it was so highly probable that it was going to come and test those points, right?
Right.
Like I have a line at 1.1778, and that's another tool that I have, but it's actually institutional levels and different things, a little bit more complex, but highly accurate.
Well, let's go and get back to if we have anything wedgy to look at here. Let's go look at the New Zealand USD. Let me just redraw. Let me draw that one the way I would have drawn I'm thinking Brian probably drew it the same way I would, but let's just take a look at it here. 845 ascending, New Zealand USD. And so we have, let me move this out. So 845 ascending. That means we're looking at going from up. So I'm going to start all the way down here. I'm going to look at this little basing right here to a pivot high. So I'm going to start from down there. And I'll see if I can tighten it up some. to this pivot high. You can see that's right in line with pretty much where near where the alert was. Here's my low. Here's my pivot high, and here's the hit. So we have an anchor, a mid hit, a hit right at where the wedge is. This is where the wedge would be. And basically I'm looking to see if it's either going to break to the downside or break to the upside. And so I'm going to go to my lower time frame. I'm going to move this D area over here. Now we do have a little bit of a trend coming down, which is where the alert was. So that's something to be, pay attention to. And I'm also looking to see inside the wedge where these levels are. Remember I was saying about the wicks. Right now here's a wick. This was broke. Here are the wicks. This was an area that would be broken. There are no other wicks all the way up until we get to this candle right here. So this is an area of interest right here. But keep in mind, it's inside where I drew the wedge. But that's also an area of interest as this point was coming down while the wedge was being formed. Again, looking at the area of interest inside the wedge, you can see where this blue candle came up. It wasn't able to take that out, but this area is still going. So this zone between here and here inside the wedge is still significant. But keep in mind, this is the top of your wedge. We're not looking to try and get any early entries. We're just trying to watch the price action of this. And again, and this is all the way down on a 1 minute chart. You can see where this came down. Here was the test of the major wedge. So this is a significant level. This is a significant level, but also I'm going to be looking at from here. Come over here, here's a wick. Come over, here's the body. And you take the next one, and where this wick, this would be significant, but I probably like this one a little bit better because this is the next one up. So I've taken over to this area. And again, you're looking at
hit or target, eh?
And you're only looking at 2 pips. You're only looking at 2 pips. How's our yen doing?
Well, the yen's looking great.
Looks like the yen hit. Looks like I got the target hit on my yen trade. On my demo, I took a demo trade on that, and looks like it did get the target hit. Let's go back to New Zealand. Again, we're still inside the wedge. So again, we do nothing, but we're watching the price action. We're seeing how this thing's moving. Might as well see how it's moving inside the wedge, because it's probably going to move a lot the same type of way. Once it breaks the wedge, it's going to move a lot the same periods of consolidation. And so I'm looking down here. Once it breaks this wick right here, let's take a look at this one. Once it breaks, again, we're just talking price action analysis. We're not talking about taking any entries. Here's the wick. If you come over here, you'll see there's another wick right here. So I can take it. Here's a wick. So right now, you have basically 3 wicks all at the same level, and then there's no wicks at all the way till you get down to here. So this is the area that I'm interested in for it to come to retest. Once it breaks here, once it breaks this wick, there's probably a good chance it's going to come down all the way down to here. And that would be, but again, you're only looking at 4 pips. From here to here, it's only 4 pips. But once it breaks the top of the wedge, we're going to be looking at this same type of a price action. Once it breaks the wedge, it'll give you some idea what you're dealing with once it happens. This is all part of the pre-entry, brain gymnastics, I'll call it. Here was a nice little move. It came back, retest. I mean, this is like higher high, higher low, higher high, lower low, because here was the previous low, but you didn't get a close. Just about got a close, but barely got a close. Just barely, like probably a half a pip. And that's just the difference of whether the buyers took the trades or where the sellers took the trades. Did the sellers fill the buyer's order, or did the buyers fill the seller's order? That's your spread. You see all the moving averages are consolidating right here. And again, it's inside the wedge. I mean, right now, another method of deciding price targets is, and Matt mentioned it just the other day, was the use of sticks. And the stick is basically what you do is you find a range of your wedge. I can take the CB range. And if you go from, take a trend, you go from the C up to where the D level is. I actually have one. This is what I call the stick. And then you take it from, here's the range. Let's get all the way down to where the C is. Let's move the C over here. So here's your range of the wedge. I'm not like using the CD range. And then you take this, and you move it all the way over here where it breaks the wedge. Wherever it breaks it, now once it breaks it and closes, get that close, here's your target. Now, part of the problem I see is I see a 30-minute moving average down below here. I'm going to draw my parallel. And we'll see if this gives us a chance to get into this thing. Entry to sell. Draw that as close to the wedge as I can. Measure it 2 pips from here. That's at 65.9. I'm going to look at 63.9. Move this down to 63.9. Right about there. I'm going to lock it. So this is my entry to sell zone right there. Thing I don't like is that you've only got from the break of the wedge. If it broke, even if it broke right here, let's see what the range is here. I'm going to be measuring this because this is a significant area. That's 9 pips. You'll still be able to get your 7 pips, so that's okay for that target. And we wait. Any
You
new
guys
questions?
really messed up the market.
What's that?
Y'all messed up the market while I was gone.
Well, that's what happens. That's you just can't go on vacation. That's all there's
So
to
I
it.
am really holding this thing up.
Did you have a good time though?
Oh yeah, today was the first time I even turned the computer on in a little over a week, which was really nice.
Oh, that's awesome.
Yeah, I'm a little groggy. It was a little hard to get back motivated, so I jumped into an early pound US just to get that out of my system. It worked out, and then I took another one. So
I always used to say whenever I left on a trip and I came back, the first day I always considered re-entry, and I just gave myself permission to do whatever I needed to do. And
just
same way with being away from trading, you have to do that first day back is kind of re-entry to get your mind back to thinking the trades, start thinking all those things that you tried to forget about while you're on vacation.
Exactly. So, Al, you want me to show what the Euro US looks like?
Sure. Yeah, let's do that. Let's take a look at that.
clarity.
I'll keep it. Yeah, while you do that, I'll keep an eye on this New Zealand yen. Right now, there's nothing going on with it.
I understand, guys, this is not IRIS. This is big picture kind of analysis of stuff, but it will give you an idea because this is such a major pair. This is the most traded pair globally. Can you guys see my screen?
I do. Yep.
Okay. This is the picture, and I just finished up. Now, there's some tools on here that I use on my Monday night sessions that I teach swing trading. If you notice where we're getting rejected, this area is orange. That means it's the education I've had. That means it's been in this area before in the past. This whole zone is a supply where you're going to expect resistance. We haven't dug into fib numbers today with our wedges. But this blue line right here is considered a wall. It's a fib number, same with the red. And we'll get more in depth with that later on. But this is really one of the most boring strategies that I've ever traded. And I've been doing it for a little over 3 years and had one losing month. So it's a very long-term thing. You let it sit and do its thing, and it's all based on price. Entry's not hard. I do an aggressive, moderate, and conservative type thing. But if I was doing anything right now, I'd be sitting on my hands on a long, because we're coming up to a place where we would expect for it to pull back. Looking at historically, what I'm looking at is I'm looking at this line right here to be my true area of where I would want to be a buyer at again. In a long-term picture. That does not mean there's not a lot of trades within that area. This is quite a bit of a move. I see this thing flattening out, to be honest. That's 300 something pips. I see it flattening out and start becoming range bound for a period of time, just because of all the areas where price has stalled in the past. These pink areas are places where price blasted away, and you hear Al talk about a basing. That would be, the 3 candles, 4 candles with a red candle in the middle, then it takes off. He mentioned that this morning in his 15 and 5 minute chart, I believe it was. It's the same thing. It's the same stuff. Price action's just a lot faster on a 15-minute chart. I could draw a wedge on this. As a matter of fact, I think I did on the U.S. yen. Speaking, we've been watching this. Now, which side of the trade? This is, again, we're on a red line where it was once resistance. At some point, it's become demand since, last year. Demand. Then it became resistance and demand again. And demand. I'm sitting on my hands on a long-term picture on this. It's not the time to get short because of the fact that we have major price action down here. It's not the time to get long because it's just a noise. It's a lot of clutter. And this is COVID. This is easing. This is governmental manipulation. But the key point, if you notice, if you drew a line across, the key price is that 106. It's really 107 because the yen likes those round numbers. It's 107. That's the control line. So if I was going to go short, I'd be going short at the 107, giving me room to move downward. But on a big picture, we talk about wedges. I drew this a while back when I started trying to learn how to do wedges. I guess it had been April-ish. I drew this line. But this is why I say we're kind of range bound all across the board. A fib line coming, it can't close above it. So my idea for the US yen is that it would go further down. How long, don't know, but I'm guessing around the 103 area, and then back up to the 108 areas. But a lot of room to trade. And it's a price chart's a price chart. But yeah, for the Euro US, it's not a place that I would go long term yet. No, I had already marked this on our Monday night sessions, a place I've been long, and I was long. I'm already out. I took my profit and got out. I like to hold on to the euro pound, which is doing something similar to the Euro US at this point. So long term, I would be sitting on my hands. Know this. If I wanted to drop down, Matt mentioned the 4 hour. I like the 6 hour chart. So just to give you a 6 hour, where I get in, the 115.96 area, which is also the 1600. That would be a nice place. And Al mentioned again, we're going to reiterate, it doesn't matter what time frame, you're still the same kind of concepts. You've got your nice 3 candle green, 4 candle green with the basing of the red, and then it blasts away. These moves right here are not done by you and I. These are institution, governments, big business type stuff. We don't have enough money to make those kind of moves happen. So when this blasted away, it left unfulfilled orders sitting here at this, where it was once resistance. It finally broke. It did test it, but it would come back down. I'm guessing and looking at it, one of my tools that I use is not coming up, so I'm going to change that. I'm guessing this will be one of my first entries right here at the 16. Second entry would probably be right this area. And my last would be down here where the algorithm is, and boom, boom. Yeah. So again, my best area is, they would call this a level on a level. Second level is usually a stronger move away, so you get a better price action on it. So I'd go for the green. If I was going long here at the 1600 area, I mentioned this one. It's not fresh, but it's still valid. And then my last one was right here on that. Again, control, we're looking at price action. It doesn't change. Price action doesn't matter what time frame. So the key line for me on this one is the 1420. And that's the same with the algorithmic whole moving average. That's what I'm seeing. So hopefully that helped give you guys an idea. I don't drop normally on my swing. I don't drop past normally the 4 hour chart. I just don't like going that far. It's kind of like what Matt's saying. On the flip side, if you're doing a 15-minute chart, there's no reason to go look at a 4 hour chart necessarily. You're going to be aware of it, but it's not going to be near as relevant. And I use some other tools down here to help me guide what side of trade I'm going to be on. We use the RCS on a 15-minute chart. I use SSI on a long term. It's the same type of thing. It's where the buyer's strong at. So it's telling me right now that majority of the buyers are short the Euro US. And we know in our teachings on Monday night and here, majority of traders lose. 5% break even, 90% lose, 5% win. So when I see this as green, I'm looking to be long because it tells me majority are short. And I have no clue why a majority of people would ever be short this particular pair at this particular time. Pride, fear, greed. They think, well, it can't go any higher. They're wrong. It can. And it looks like it will. It just depends on how much. If it breaks this supply zone like I think it will, then we're going to move up to this nice pivot basing here at the 2180. But it could take some time, and it doesn't mean it won't pull back either. So hopefully that provided some insight.
Yeah, I know, it's good. It helps us that are not maybe as good or as knowledgeable in that side of trading, because you need different experiences, right? You need, like me, I've never, before getting into some things, I've never looked at the daily chart or 8 hour very rarely, because I've always just needed a small precision entry to get my profits and then walk away for the right. Day. I never, like, me holding a trade for a while, that feels weird.
Yeah, it's a wealth bucket type strategy where it's kind of like saving, like it's kind of what I use with Alexander. I just let it do its thing and don't worry about it, because it's not my income generator, it's my wealth holder.
Oh, I like that.
Yeah, so yeah, and it is going against retail sentiment. It's also going against, even it could be institutionals, but most people, institutions, governments, and things like that pretty much know what you're doing. Yeah, that's right, Jay.
Yeah, most people are wrong.
Most people are wrong, and so trade against them, take their money, and then say thank you.
Don't forget to say thank you.
You don't forget to say thank you.
Yeah.
You know, as you can see back with this New Zealand US, you can see it's not doing anything earth shattering. It's just trading inside, just making moves inside the wedge. And this is where you could, if you're trying to get an earlier jump on the thing, you could get whipsawed quite a bit in this area.
And honestly, I try not to even think about the wealth bucket type trading during this time, because it will cloud too much noise. Because I would be going, oh no, I want to be going long this, because my long-term stuff tells me I need to be long. Well, I could be losing an opportunity on a shorter time frame to go short and enjoy the pullback ride that's naturally going to happen. But because I get clouded with that's why my wealth bucket takes probably 30 minutes a week. That's all I look at it and let it do its thing. This is a little bit more, I want to be on top of it. Take advantage of both ups and downs. Now you're running to, according to my clock, about 30 seconds.
30 seconds till that's till we're done, or is that till we have
we're
a break?
done?
Okay.
From what my schedule shows, we go to 9:30 today.
9:30 today. I believe that's correct.
So if you've got closing words,
That was super quick.
The only thing I can say is don't take any, know the entry, know how we do it. Wait till if this New Zealand breaks to the upside or the downside. Right now, we have no idea, but wait till you get the entry as we try to describe it, and then take a shot at it. Right now, I think this thing is just going to be going sideways for a little while. It's going to be a while before it breaks out, but no, be patient and let the trade plan tell you what you're supposed to do, and then not be afraid to do it. On that note, thanks for everybody for coming in. Appreciate your attending, and we'll see you again tomorrow.
Absolutely.
Have a great day, guys.
Thanks.